All right, everybody, we're going to get started with the 3 o'clock session. I know everybody's had a pretty long day. You probably need a cup of coffee or an espresso about right now. But I hope you learned something from today's presentation. I'll do my very best to keep you mildly entertained for the next 45 minutes. And I'd like to start the presentation by just thanking the good folks at StockPulse, Rob Goodman and Gina Dryfall, who put on this conference. They've gone out of their way to get us all together again after a few years off. The Northwest, thank you. Yeah, put your hands together for those two people. We wouldn't be here without them. The Northwest has actually always had a very special place in my heart. When I was a very young man, I used to come out here and work the Silver Summit show, which some of you probably remember. I was working for Kitco at the time, and I used to travel all over the United States. And my favorite show was always in Coeur d'Alene. It was like the most intimate, the friendliest. You know, you got to meet people and be in this beautiful part of the United States. So it's really nice to be back. I mean that genuinely. And especially since last year I tried to come and present here, and the Border Patrol, the guys at the U.S. border, didn't let me into the country because I wasn't an essential worker, and I tried to cross over during COVID. So particularly good feeling to be back here with everybody in Spokane. So my goal today is to share as much knowledge and information as I can about precious metals with you, given the time that we have together. I've been working in the field for 16 years. I started at the young age of 26 years old. And I've really built my presentation today to try to speak not only to seasoned gold and silver investors, but also to newbies, people that are just thinking about investing in gold and silver for the first time and might be asking themselves a few questions. So the presentation kind of touches both on subjects that are for the experienced investor and for less experienced investors. We should have some time at the end for a Q&A. I hope you have questions. And if we don't have time to get to your question, I'll be around for the next 2 days, and we can find a quiet corner and speak a little bit more. So a little bit about myself. My name is Mark Yaxley. I'm the co-founder, managing director at SWP. If you've never heard about SWP, we're a fully integrated precious metals dealer and storage facility headquartered in the Cayman Islands. That's something that makes us a little bit unique, I guess you could say. All of our clients and all of our transactions, everything that we process for our business is done through the Cayman Islands. I've been in the business since 2006, as I said, and you might recognize me. I know at least one person in this room recognizes me from some videos on YouTube. We put together a series of videos called Inside the Vault, which we had very modest expectations for at the time. We designed the series. We were hoping to get about 25,000 views. We've gotten about 7 million thus far. If you haven't seen Inside the Vault on YouTube, it's a series dedicated to education about gold and silver. So if you like physical gold and silver and you want to learn more about all the different aspects, you might want to check out Inside the Vault on YouTube. It's pretty cool. We're pretty proud of that series. As I mentioned, SWP, fully integrated precious metals dealer and storage provider. We own and operate a large storage facility in the Cayman Islands. We also offer our clients access to a network of vaults strategically positioned all over the world, including 4 here in the United States. But enough about me. I'd like to know a little bit about you. So by show of hands, raise your hand if you already own or invest in physical gold and silver. Almost everyone. Wow. Not many rooms in the world can answer yes to that question, I'll tell you that. And what about, if you're relatively new, raise your hand, or you're thinking about investing in precious metals for the first time, physical precious metals, not miners. No one. Wow. This is great company. This doesn't happen very often. Usually you're the only guy at the table that knows what he's talking about when it comes to gold and silver, so this is great. And how many people here have ever considered secure storage, storing precious metals outside of their homes? Well, a few people. Okay. good. I was afraid nobody would raise their hand to that one, so that's good to see. And last question, how many of us are a little bit surprised or disappointed about the price of gold and silver right now? Yeah, like this. Yeah, shocked. That's the right word. So these are all things we're going to talk about today. I wanted to get an idea of the crowd so that I had a better sense and I could kind of tailor the presentation a little bit as we go through it. So I wanted to start with what I consider fast facts. This is to get our minds going. I know everybody's tired. I want to get your minds going a little bit, give you some context for this presentation. So I'm going to throw a few things at you to get you thinking here. This is one of the things that I find so interesting about physical gold or silver, that it's considered under the law your personal property. And that is important for a variety of reasons, namely being that no one has title to take that physical gold or silver from you. You eliminate effectively third-party risk by owning physical gold and silver. That's so important. It also means that you can bring it with you just about anywhere in the world. You can carry this stuff the same way you carry or wear your watch on your wrist or carry your laptop in your bag. You can take this gold and silver with you, and that's something a lot of people don't realize. They think it's kind of stuck where it is. That's not true. You have the right and the ability to carry it with you wherever you might be going across borders, Europe, Asia, wherever it might be. So keep that in mind. The next time you're filling out a declaration form and you're a little bit nervous about checking the box about carrying gold or silver, it's completely legal because it's your personal property and only you have title to it. Second fast fact is that, believe it or not, and we have a seasoned group here, so this might not be news to you guys, not all gold and silver bullion products are created equally. This one is in the presentation mostly for people who are thinking about investing for the first time, to remind them that when you're presented with a product offering, it might not be the best deal out there. There are such things as good deals in physical precious metals, and there are such things as bad deals. And I'm going to try to give you some guidelines today about how to pick or how to find a good deal when you're investing in physical gold and silver. But just keep that in mind the next time you see an offer that seems really good for physical metal. It might not be that good until you dig into it a little bit. You run a couple of numbers, and I'll show you those numbers that I run personally when I'm considering what products to invest in. And the last fast fact, and we'll touch on this a little bit later in the presentation, is the idea that gold and silver in a safe deposit box or stored at a bank is safe. I hate to tell you, it's not that safe. For one reason in particular, not because a bank is part of the financial system. Yes, that's something that worries us. But it's because if you're holding gold or silver in your safe deposit box at the bank, it's not insured. So if something goes wrong, if there's tampering or theft within the bank, sometimes they drill out the wrong box. Sometimes they open the wrong box. Sometimes records go unaccounted for. That gold and silver that's your personal property is uninsured in that safe deposit box. And personally, that would worry me. So we're going to talk a little bit about secure storage options that exist for you that are fully insured, okay? So the first thing I want to throw at you guys is what I call the 3 golden rules. These rules apply both to gold and silver. I know we're at the Silver Symposium, and we're going to kind of jump back and forth between gold and silver a little bit today. I called them the golden rules. You could call them the silver rules. Doesn't sound quite as cool, so I went with the 3 golden rules. They're guidelines, really. When people are investing in physical metals, these are guidelines. These are basic principles that I think you should apply in order to save yourself some money and buy more ounces with your dollars. That's what my mentor taught me. Get more ounces with your dollars. That is the key to investing in physical metal. But before I show you the 3 golden rules, it's important that everyone in the room has an understanding of how the spot price works, okay? When you're buying metals, you always have to think about the spot price. Now, this is a little bit dated. Unfortunately, the price is significantly lower now for silver, but we're only using these numbers for the purposes of the example. So what we see here is the spot ask and the spot bid. So first question my wife asked me when I practiced this earlier today, she said, why is there 2 spot prices? Very good question. We use the spot ask when we're selling metals to investors. So as an investor, when you're buying metals, that's going to be based on the spot ask price. The dealer is asking you for your money. Think of it that way. The dealer is asking you, it becomes a spot ask price. And when you're selling your metal back to the dealer, it's based on the spot bid price. The dealer is bidding on your metals. And there's a small spread in between the two. And that's a way, one, for the dealer to protect their interests when they're making trades, and also to earn a little bit of a wider margin. One of the reasons that it's there. So for the sake of our example, what most investors focus on almost exclusively when they're investing in precious metals is the premium they're paying per ounce. It's really the thing that they tend to really zero in on when they're making that purchase. And it's important. It's really important. You don't want to underestimate the importance of the premium per ounce. So I've highlighted the number 3 here in our example. We have the spot ask silver price plus $3 an ounce. So this particular 1 ounce silver product is going to cost us $25.39. But there's a second part to that equation. When you're investing in precious metals, you're not only buying the products, you eventually want to sell them at a profit. That is the goal, after all. You have to think, I have to have an exit strategy at some point in time. Now, I'm not saying you're going to turn around and sell it the same day for the same spot bid price. Don't get me wrong, we're just running the numbers here for the example. But you need to consider your discount at the time of your sale, okay? So you need to look at the second part of that equation when you're making your product selection. And you'll see what I mean here. We call that the total spread. You want to calculate the total spread of the different products that you're considering for your investment. Don't just focus on the premium, because that can be deceiving. You can buy the product with the lowest premium, but it has a bad or poor buyback price or discount when you're selling it, and your spread can actually be quite wide. Vice versa, you don't necessarily want to buy the product with the highest premium either, even though it has a higher buyback price. You want to calculate your total spread and try to get that total spread as tight as possible in order to get more ounces for your dollars, because that's really what this boils down to. So let's keep that in mind and hop back to our 3 golden rules. Rule number 1, or guideline number 1, under most market conditions, gold vis-a-vis silver, platinum, palladium, or rhodium, which are the other 4 precious metals you can invest, has lower premiums and, more importantly, a lower total spread in percentage terms than the other metals. Okay, so that's guideline number 1. If you are going into precious metal investing, physical metal investing, strictly thinking, I want to get the most cost-effective option or metal, gold will be that choice under most market conditions. Now, I'm not saying don't own silver. I own quite a bit of silver myself. I think you should own all precious metals in a well-rounded portfolio. But when you're asking yourself or having this conversation, gold will have the lowest premium or lowest total spread. The second golden rule is bars will tend to have lower premiums and total spreads than coins. This is important because a lot of dealers will try to sell you coins. And a lot of investors, and we'll talk about this later, tend to focus almost exclusively on sovereign mint coins. There are a lot of options out there for you, and bars are another way that you can save maybe 1, 2, 3 percentage points on your purchase, which means you can buy more ounces for your dollars. And further to that point, sticking to that same thought, larger bars will have lower premiums and total spreads than smaller bars. Okay, so if, for example, you're considering an investment of 100 ounces of silver, you would be best to look at 100-ounce silver bars versus 100 1-ounce silver rounds in terms of premium and total spread. Now, your personal situation might dictate you go with the rounds, but in terms of premium and spread, from an investment point of view, you're probably going to want to go with that 100-ounce silver bar. Okay? So just some basic knowledge, some guidelines that you can consider when you're making your next purchase of physical metal. A beautiful picture of Lady Fortuna, I believe. No, it's not Lady Fortuna. The Britannia 100-ounce silver bar. So, as important as facts and information about buying precious metals is also the myths and misconceptions that we hear often within the industry. And these are the things that raise the hair on my neck as someone who works in the business, and I read a newsletter or an investor says to me, hey, I heard this, or I want to buy this because. These myths and misconceptions are as important as an investor to be aware of so that you can dodge this misinformation. You hear that word a lot these days. There is misinformation in our industry as well. And so I wanted to present a few of these myths and misconceptions to you in today's presentation. This one I hear a lot. Probably the most common of all myths and misconceptions I hear when I'm speaking to investors. They tell me coins are more liquid than bars, right? So why would I buy bars? So the truth is, any dealer, so if you have any dealer of any size and ability, they will make a bid on your coins and your bars, not at necessarily the same price, but they will always make a market or an offer on your bars as well. Just because you buy a 100-ounce silver bar or even a 1,000-ounce silver bar, it does not mean you're stuck with it and you're not going to be able to sell it. You have liquidity. Very important to remember. So long as you're dealing with a dealer that has size and ability, they can make a market, they can make a competitive bid for you on your bars as well. So don't get pigeonholed into the argument that you have to buy coins because they're the only things that give you liquidity. Okay? Keep that in mind. Another good one, and this is very timely. We hear this a lot these days. Gold and silver are a good hedge against inflation. I've read that a lot lately. A lot. And some of the big names in the industry say this. So it's got to be true, right? I heard it and read it so much that I actually had to go do some research myself to understand, well, what is the relationship between gold and inflation? Because I keep reading it's true, but then I look at the gold price and it keeps going down while inflation is going up. So I needed to understand the relationship myself. So this is what I found out. The last time we had inflation this high, some of you will remember this, was in the mid to late 1970s. Inflation in the US was running over 10% at that time, slightly higher than today. It hasn't happened again since the late 1970s, early 1980s. So when we look at the data from that time period, when gold did react, had a high correlation to inflation at that period of time, it's been about 40 years. The data is a little bit stale. So the narrative did get created at that point in time, and that's the same narrative we're hearing and we're reading right now. We're basing it off data that existed a long time ago. And it is true that gold reacted positively to inflation at that time. It's true. But it didn't happen overnight. It actually happened months and years after the inflation had really set in the economy. It wasn't a lockstep. It wasn't like they announced the inflation numbers on a Monday and on Tuesday gold skyrocketed and reacted. That's not how it happened. Gold actually reacted a year and two afterwards. After the event, we started to see a strong increase in the price of gold. So that was the first takeaway, is that there's a gap of time that's required for gold and silver to react to the inflation. But more importantly, and this was pointed out by Jeffrey Christian in a recent presentation that he did, is that the data the data that we have from 40 years ago isn't representative of the situation today. The global economy, the way that the global economy works, has changed dramatically in the last 40 years. Globalization has occurred. Derivatives have been created. You know, the way that people trade and use technology to trade has changed the world dramatically. And so we cannot rely on data from 40 years ago to make very important decisions about what we're going to be investing in. As Jeffrey Christian pointed out, the correlation between gold and inflation right now is actually very, very low. So I just wanted to take a minute to comment on that. The next time that you're thinking about making an investment into gold and silver, don't do it only because you think it's a good hedge against inflation. Now, not to contradict myself, but inflation does trigger important economic events. It does trigger rate hikes. It will have impacts on the financial markets. And those are things that are good for gold, that can be good for gold. So I'm not saying it doesn't have an effect, but the direct correlation today is not nearly as strong as what we're being told. Okay? And this is the last myth that I want to tackle with you. A little bit similar to number one. I hear it a lot from investors. They say, Mark, I want to invest $100,000 in silver. I want silver eagles. They're produced by a sovereign mint. It's a great buy, right? And I really cringe inside because I know the premium on those Silver Eagles is just really high, and I feel bad selling them to people. I'm not going to try to talk them out of that investment, but they need to be aware that buying product only from sovereign mints is not always the best option as an investor. There's a number of private refineries that are LBMA on the LBMA and COMEX approved lists that create top quality products that have all the same purity levels, all the same weights as these sovereign mint products, and they're really at a fraction of the premium that you're going to pay for Silver Eagles. A couple weeks ago, I was researching the cost of Eagles for a client, and the wholesale cost was $12 over spot, which means that investor probably was going to pay $14 over spot for his Silver Eagles. Now, when it comes time to sell those back, he might get $5 over spot, $7 over spot if he's got a generous dealer that he's working with, but he's never going to get back the full $15 premium. There's no way. And in a bad market, he's probably going to get $2 or $3 over spot at best. So my advice there is always look at the alternatives that are available to you. And again, don't get pigeonholed into thinking sovereign mint coins are the only way to go. There's a lot of good products. And think back to the total spread calculation that we looked at earlier. Run those numbers for yourselves, and you'll see that there's other good options out there for you. Now, we're going to play a little game, and there is a prize attached to this. I'm not going to announce the prize until after somebody gets it right, and if nobody gets it right, I'll announce a prize to incentivize you a little bit. And the person who it is in the picture cannot answer this question. So the question is, who is the man standing next to the vault door? This is our vault in the Cayman Islands. Jeff Clark, man in the front row. You had a good seat for Jeff's presentation. He looks a little younger. That's what my wife said. She goes, that can't be Jeff. That was 2015. Jeff came to visit us in the Cayman Islands. We just opened our vault down there, and he was our first official SWP client. Thank you, Jeff, for breaking the ice. And sir, I'll come see you afterwards. I have a little prize that will get organized for you. So we're going to change gears a little bit. We're going to talk a little bit about storage, okay? And in the context of today's conversation, we're going to talk about secure storage. And what do I mean by secure storage? Now, obviously, you have the precious metals that you store at home. All of us likely store some of our gold and silver in our home, and that's a good thing. We advocate that to our clients. You should have some available to you in time of crisis, or if you're in a crunch and you need some cash. But there comes a certain point in time, or a certain number, or a number of ounces, that makes you a little bit uncomfortable. Personally, my number's around $25,000. If I got more than that, gold and silver sitting in my house, uninsured, because my insurance policy doesn't cover it, then I get a little bit antsy, and I might want to think about other places I can put it. The bank safe deposit box comes to mind, but as I pointed out earlier, those aren't insured, so that's not a great place. Thankfully, there are places in the world that exist that offer secure storage specifically for precious metals. You guys have a great one not far from here in Idaho. And then there's other vaults that exist all over the United States and all over the world where you can store your precious metals. So we're going to talk a little bit about that. I'm going to tell you how to pick the best location, not only from a geographical standpoint, but also the facility itself, because there's a lot of facilities to pick from. So how do you make sure that your gold and silver is actually in a good facility, a place that's well managed and well run, and you feel secure about that? And lastly, I'm going to tell you, how do you get it there? We get that question a lot, like, I live in Idaho, I'd like to move my metals to Singapore. Like, how does that work? So I'll give you a little bit of an overview about how that works as well. It can feel overwhelming. It's actually very, very simple. But the first question is, why even consider it? Why would I consider secure storage? Why do people consider secure storage? Why is there such a large element of our industry around secure storage? And it really depends. It changes from person to person. Everyone lives in a different place. Everyone has their own set of circumstances, their own fears, their own belief systems, things that make them lose sleep at night. For some people, that's the government, and as a Canadian, up until recently, I was pretty proud to say that my government would never confiscate anything from me. I felt really safe about that statement up until about February of this year. And I think everyone in this room read the articles or saw the news. Our government confiscated people's bank accounts. It's true. I saw the reports. It actually happened. So it's happened here in the United States. That's well documented. We know there's been confiscation before. So political risk, corruption, physical theft. Do you live in a safe neighborhood? Do you have teenagers? I was a teenager. I went through the liquor cabinet. I'm not going to lie. I think we've all done it. So you have to consider these things when you're storing physical metals at your home, and that's when you start to think about different alternatives. One of the perhaps more advanced concepts would be to achieve geodiversification. So if that's not a term you're familiar with, all that means is that you are strategically picking places to diversify your risk, not having all of your eggs in one basket, is the old saying. Well, in this case, you could have multiple storage locations for your goods within your own region, within the United States, or even outside of the United States. You can store these things in Singapore, the Cayman Islands, Switzerland, New Zealand. There's a lot of interesting places that you can put your precious metals these days to diversify yourself of risk. Okay? And this is the most often overlooked reason to put your metal inside of a vault is liquidity. I live in a small town up in Golden, British Columbia. It's ironic, I live in a town called Golden. Golden has no gold dealer. So if I need to sell my $20,000 worth of gold or silver because it's a medical emergency or I just need cash, put a deposit on a property, I don't know, whatever it might be, I have nowhere to sell it. It's just in my house. I have to drive to Calgary. I have to go to a dealer I've never spoken to, hoping that he gives me a good bid. Maybe I won't get a good bid that day. Maybe business is slow that day. So when you select a storage facility that offers you liquidity, meaning they will buy your precious metals, not only will they sell it to you, they'll also buy it from you at a competitive bid, you've actually improved your situation as an investor. Now, it's going to cost you a little bit of money to store your metal, but how much is 0.5% or 0.75% worth to you in terms of improved liquidity, security, insurance, all of the above? So what do you look for? The basics here, if you're looking for a secure storage facility, is obviously you want to pick a place, a jurisdiction. Now, this could be locally, this could be internationally, that's politically and socially stable, doesn't have a high crime rate, favorable property laws. Favorable property laws might mean that they don't have bail-in laws, or they don't have a history of confiscation in those places, or they actually have laws that say that the government cannot take or confiscate personal property. They do exist. There are countries that actually have laws that protect people's personal property. Little or no fiscal debt. Believe it or not, there are countries in the world that have little or no fiscal debt. And little or no corruption. And we mentioned Canada earlier. Might not qualify any longer. You're going to want a place that's within a day's travel, whether that be by car or by airplane. And speak the same language or a similar time zone. Now, this is just a practical insider's tip. We offer storage to our clients in Switzerland. We offer storage to our clients in Singapore. Lost in translation is a real thing. It happens. You know, we send an email, we send a request. They don't quite understand what we want. We have to email them again. That's another 24 hours lost because they're in a different time zone. They work on a different schedule than we do. We're writing emails, they're in bed, vice versa. It slows down the process, okay? And that can affect your liquidity as an investor. If you need to sell something quickly and take cash immediately, you want that to run as smoothly as possible. So when you're selecting a jurisdiction, keep that in mind. You're probably going to want to speak the same language and be in a similar time zone. You might not be in the same time zone, but a similar time zone. You want to make sure that that storage facility offers you fully allocated, fully segregated, fully insured storage. What does that mean? Fully allocated. If you buy gold and silver, it is the actual bars and coins that you purchased. You are not buying into a position of a bar or a fraction of a bar. Your assets are not commingled with other investors. It's not unallocated. It's not a pool product. It is allocated physically, bars and coins. Segregated, pretty straightforward. You have your own bin, you have your own box, you have your own place on the shelf. It is not commingled again with your neighbor's assets or the other clients in that vault's assets, and 100% insured. Always make sure they have enough insurance in place to cover not only your investment, but the global amount that they're storing within that vault, okay? because some vaults will only insure a fraction of the holdings that they have at their facility to save money. Insurance is very expensive. And again, liquidity. Make sure that you can sell your gold and silver when it's in that vault. So you're looking for a precious metals dealer that operates a vault as well. If you have those two things, you can buy and sell freely and store your metal securely within that facility. That's the ideal situation, okay? And make sure Jeff Clark's a client there as well. That says a lot. Jeff, put that in your report. Okay, so we're almost there, guys. Getting towards the finish line. I know it's been a long day. I want to share with you just how you go about doing this. How do you get your gold and silver from your home or from wherever it is now to the next place that you want to store as part of your strategic plan? Option number one, you start fresh. Super easy. This is the easiest way to go about it. Find a precious metal dealer that operates a vault. If they own and operate the vault, that's great. That's an added bonus. And start new, open an account, buy the precious metals. You don't have to ship anything. You don't have to travel with them. It's a very simple way to go about it. Just start new, start accumulating a new position. That's quite obvious. Whoop. Option number two is to ship your metals. If you've never shipped precious metals before, I know that can be kind of overwhelming. It's a little bit nerve-wracking. You know, what if it gets lost? You know, what if the FedEx guy takes off with it? It can happen, but that's why they have insurance. So work with a precious metals / vault that has a shipping or logistics service. There's a lot of us that do that in the industry. Okay? They'll provide you with a prepaid label, packing instructions, and insurance to move your metal from wherever it is today to that new storage facility. All you have to do is pack it up, go drop it off, basically. And it's insured from door to door. I would recommend that you get the help of a professional when you do this and not just undertake it yourself. You can go down to USPS and get a box and fill it up and ship it, but there are guidelines when shipping metals that you're probably going to want to follow. And the insurance factor is huge. I don't want to get in an argument with the USPS guy over my $25,000 worth of metal that just got lost. I would rather hire a third-party company that does this every day, okay? Now, this is one that very few people know about. This is like an insider term. It's called a location swap. So let's say you own metal, just for example, you own metal in Switzerland, and you want to move it to the Cayman Islands. But you're really concerned about shipping that metal across borders, or you want to have as much confidentiality and privacy as possible. Now, this is important because a lot of our clients they value these things. So there's a way it can be done. It's called a location swap, and it's pretty straightforward, actually. Always starts with find yourself a reputable dealer that offers secure storage. Always rule number one for all these slides. So what ends up happening is the dealer will buy your metal locally. So let's say that's Switzerland. The dealer will buy your metal in Switzerland locally. Could be here in the United States as well. They'll then use those proceeds of the sale to sell you the equivalent number of ounces, gold or silver, in the new location. So they buy it and then sell you the equivalent ounces. The metal never actually ships anywhere. It stays in the original vault when it's bought, and it lands in the second vault when it's sold to you. That way you've avoided sending metals across borders, which for some people is important. I'm not saying you have to do this. It's just an option to you. What's the premium when you do that? Very good question. So now we're thinking numbers. That's exactly what you want to ask. So you're going to have a spread on the first side of the transaction when it's purchased from you, and you will have a spread on the second side. So it will generally cost you more than to ship it. But again, if you value that confidentiality and privacy of not, for a lot of Americans, it's in and out of the United States, right? They don't want U.S. Customs to know that they're shipping metal out or shipping metal in. It might be worth paying that extra 2-3% in order to do that. Yeah. And the last way you can do it is you can travel with your metal. So this goes all the way back to the beginning of the presentation when I said metal is personal property. All right? It's a beautiful thing. You own it. It's yours. Nobody has title to it. Even the guy at customs can't take it from you unless you give him a reason to. If you are moving precious metals across a border with a legitimate reason, I'm relocating my family, I'm delivering it to a vault in the Cayman Islands. I've done these things, trust me. I've been through New York LaGuardia with over $10,000 worth of gold. I've declared it. I've been in the back room. I've been questioned. It's legal. They can't take it from you. They're not allowed to take it from you. They might want to, but they can't. There are some rules and laws and rights that do govern U.S. customs, Canadian customs. So, again, if you want to travel with your precious metals, you can. We have a great video online in the series Inside the Vault that talks about all the different steps, going through security, going through customs, what are they going to ask you, what to expect, all those things, so you can travel with your precious metals, flight, cruise, you can drive, whatever you prefer. So just know that's an option to you as well. Okay, we're getting pretty close to the end. I'm going to wrap up my presentation with my market outlook, and then there'll be a few minutes left for questions and answers. I'm going to put an asterisk next to market outlook here because I'm not an analyst. You've been witness to Jeffrey Christian, Jeff Clark, David Morgan, some guys whose job it is solely to tell you, or more or less, where's the price going to go? That's not my job. My job is to work with investors to help them buy metals and to move metals around the world and put them in IRAs. But I do have my ear to the ground. I do speak to investors every day, and I speak to really smart people every day, so I wanted to share my thoughts on where I think everything is going. This is a fact I can tell you because I'm in the industry and I see the demand for products. Demand for physical metals in the last quarter is down. It had been really good for about 2 years post-COVID. We saw a heck of a lot of demand. It was quite, we saw premiums. You guys probably noticed premiums got really, really high. We're starting to see premiums come down. We're starting to see fulfillment times come down. That means there's less demand. Premiums only come down when wholesalers can't move product. When they need to move product, they drop their premiums. And eventually it gets so cheap, they're basically giving this stuff away. We're not there yet, but we are seeing demand come down. We're seeing premiums start to come down, fulfillment times come down. Principally in North America, China, it's actually, China's been suffering with this whole COVID thing. Their economy is slowing. People are buying less gold. And the ETFs as well, there's net outflows in the ETFs right now, I think, for the last 3 months consecutively. And if you want a reason to know why gold and silver are not performing, we go back to that question, why are we all surprised about the price of gold, silver? Look no further than the US dollar. It's not just strong, it's ultra strong. It's like superhero strong right now. It is at near a 20-year high. 20 years, that's a long time for this to be at a high. Now, gold and silver are priced in US dollars, so it's pretty simple math. If you've got a commodity that's priced in USD, it takes less strong US dollars to buy an ounce of this stuff. The correlation is almost 1-to-1. First quarter, US dollar was up, I think, 5.5%. Gold was down 5.4%. Direct correlation between the two. So, what does that mean? Do we think the US dollar is going to stay as strong as it is? Do we think the US dollar is going to go even higher? Or do we think the US dollar is eventually going to cool off? My bet is it's probably going to go a little bit higher in the near future, but eventually the euro, the pound, other currencies that it's compared against are going to strengthen again, and the US dollar will start to cool off. And at that point, we will start to see the gold and silver prices begin to rise again. Silver will outperform gold on that leg up. So personally, tempered expectations. I think that's the word I use a lot. For the rest of 2022, it would be easy for me to stand up here and say, silver's going to $50, gold's going to 3,000. We'd all high-five each other and pat each other on the back and celebrate the fact that we're all really great investors. That's not the market we're in. It's true. It's just not the market we're in. There's a lack of demand right now and a very, very strong US dollar that is really making it difficult for the gold and silver price to rise right now. So if we're buying right now, we're buying it at a good time. I mean, prices are relatively soft. We're getting a pretty good deal for the future. I'm happy to buy ounces of silver at spot price $18.50. Fantastic, all day. But I don't think that price is going to be very, very strong for the remainder of the year. But if you're getting down about the price of gold and silver, look at its friends. Look at the rest of the crowd. NASDAQ, this is year to date, Jan 1. NASDAQ 27% down, Dow 13, S&P 17, Bitcoin 56%. Gold's down 4.5% year to date. So we should be rejoicing, really. I mean, if you went long gold going into this thing, and there was precursors, there was signs that bad things were coming. And if you went long gold, silver down 24, 25%, not so good. But silver always acts that way. In a bad market, silver will be a multiplier of the gold, of gold's behavior, and in a good market, it'll outperform gold 3 to 1, 4 to 1 sometimes. So, but I think the takeaway here is you can't always be on the offense. You can't always make money. There are markets, like right now, where you're going to take a hit. You're going to play some defense. We're in defense mode. We're in wealth preservation mode. Gold is a great way to preserve your wealth, generally speaking, historically speaking. So you might want to go a little bit longer gold, because I personally think this is going to get a little bit worse before it gets better. And long term, all the fundamentals are still there. Inflation hasn't gone away. If you read the Jackson Hole minutes, or you listened to the speech, it was very hawkish. I mean, the Fed is going to attack inflation, they say, full on, aggressively, as long as they have to. That's not going to be good for the economy. That's not going to be good for the markets. And then you've got the housing crisis that's starting to develop in Canada, in the United States, and in China, all simultaneously. I remember 2008. I remember housing market crisis came up a lot. It was a big contributing factor. Might happen again. And you've got a war in Europe. You've got a war in Europe. We have a war in Europe. Let's not forget about that. And it is not the Ukraine against Russia. It is the West throwing a lot of money at Russia. So that war could drag on for an awfully long time. That problem is not going to go away. So long-term fundamentals and reasons to consider owning gold as a hedge. Thank you for your attention. I hope you learned something. We can do a little question and answer now if you'd like. Okay. I mean, it's hard to look past the short to mid-term right now, but I would say it's fair to speculate that the dollar will remain strong for at least the next 6 months. Yeah, because they're not far enough in their corrective action to really deter it from being strong. But I'm no expert on the U.S. dollar. I'm not. No. Sure, yeah, it's a good question. The question was SWP Capital. So what does that mean? Something that a lot of people don't know. This is relatively new in our industry. So the gold industry is like 6,000 years old. Nothing ever happens. Super boring. Very boring industry. And the newest development in our industry, though, is that you can borrow money against your gold and silver. That's becoming a very common service now in our industry. So if you hold, let's say, $100,000 of gold or silver, you can actually borrow up to 75% of the value of your precious metals. You could take a loan against your metal. It acts as a collateral. And those loans right now are ranging anywhere between about 7 to 9%, depending on the value and the term of the loan. So that's a service you're starting to see more in the United States. We offer it. Singapore and Switzerland, they've been doing that quite a long time now. But it's something to consider if you're going to be buying real estate. It's an alternative to the bank. You're not selling your gold or silver. You're only using it, pledging it as collateral for the loan. So something to check out. It's new in the industry. Have a look. And you can, good question, Jonathan. He's been to the website. You can be an investor as well. So if you wanted to invest capital, so if you had $100,000 that you wanted to invest, you can buy what we call a precious-backed securitized note and earn the interest on the loan. So we match a lender and a borrower together. There's a spread in between, obviously. That's the business model. But you could earn 3 or 4% return on the lending side as well. Leasing your metal. So that's a metals lease. We don't offer that right now. There are some companies that do offer metal leases. Generally, they're in the United States domestically because they'll use the metal. They'll lease it to a jewelry company that will use it for production. Yeah, most of the metal that we store for our clients is offshore. We do have some here in the United States, but most of it's offshore. Yeah. And I think the return on leases right now is like 1 to 2% for Kinesis. Yeah, I was an early investor, as Jonathan knows, in Kinesis. I don't follow the company close enough at this point to really comment. They seem to be one of the good ones from what I've seen. I just read their audit report. They have over $100 million in metals back in their program. They seem to be well capitalized. I'm glad you asked, because of all the precious metal backed tokens that I've come across, they seem to be one of the better ones. I also know the management group. I've dealt with them in just trade in physical metal before. I know that they're legitimate. I know that they're experienced. They work out of the Singapore and Hong Kong market. But I would say, on that question, there are many tokens out there to be aware of that are not a good deal. And you want to do your homework before you start throwing money or silver or gold at precious metals-backed tokens. There has been a lot of flops. And so just be mindful of that before you get involved. We've witnessed that firsthand, so just be mindful. Any other questions? No? All right, well, thank you for your time. I appreciate it, and I'll be around for the next day and a half. Thank you.